Okay, so what I'll do is I'll try to take the paid one for a month or so that this problem doesn't arise. Now, one more thing, clarification. I was little going fast of thinking of completing more, but what I will do is today I will finish income tax. The next day I will do the GST because there's no point in rushing. We'll go a little slow so that we understand it better. If we can do a little bit of GST, we'll do it, but let us not rush it because we need to understand it better. So I hope all of you have come. 12, I don't know, now it's showing only 11. So anyway, Ashwin is probably trying, I'm not too sure. So Ashwin is there. Okay, now this thing as far as okay, Ashwin. Now somebody was, I saw 12 names, so I didn't see what it is. So now what is this? Prabhakar Now, what is this thing that they're talking about? Prabhakar is received 6 lakhs on 31/3. Assume that it's 31 2020, whatever is your year that day, and maturity as maturity value, for which he had taken some years back. Sum assured was 5 lakhs, annual premium 1 lakh 40. So therefore, what is important is whether it is 10% and more. Annual premium 10% or more. So it is more than 10%. Therefore, it will not qualify under section 10(10)(d). There is a section 10(10)(d) which says that if the payment is being made more than this, it will not qualify under this. As a result, the amount that is received will also be taxable. So what are they asking? This we are discussing under TDS. Now, what you have to write is the company has to deduct TDS on this, I think, under 194D, if I'm not mistaken. Now you see the importance of I asking you to by heart the sections, because then only you can relate to these sections. You understand? So let us look at the solution now, what they have given there. Maturity, sum assured 5 lakhs. Annual insurance is how much? 1 lakh 40. As the annual insurance is more than 10% of sum assured, exemption under 10(10)(d) is not available. Not 94D, 194DA. Consequently, 5% TDS is to be computed on the maturity value of 5. Who will deduct the TDS? The LIC will have to deduct TDS because they are paying the money of 6 lakhs now back to the insured, that fellow. So 5 lakhs of the sum insured, but including the bonus and all that, he's getting 6 lakhs. See, sum insured is 5 lakhs, but he's getting 6 lakhs. Why? Because he's getting bonus and all that. Now, whether there's a taxability under 194DA, yes, it is taxable because the exemption on 10(10) is not available because the annual premium is 1,40,000, which is more than 10% of the sum assured. Sum assured is 5 lakhs. Therefore, 10% of it is only 50,000. But he is paying how much? 1,40,000. The 10(10)DB exemption will not be available. As a result, when he gives the money back, it will be taxable. That is the logic under 194DDA. Now, again, I'm stressing the point that if you know the provisions, you can write it easily. Otherwise, you cannot remember it. That's a problem. So anyway, keep doing it. What I'm saying is at the moment, don't worry about all those things. Just keep doing. The idea behind this to make you sure that, you are able to get these things right. Because in the exam, don't panic. Whatever you can do, you do. That's it. Now, next question. Second part. So therefore, what is how many? 8 marks for 4 parts. 8 marks. 1, 2, 3, 4. 2 marks is. But if you know, you can easily get it. You just have to write it. Next part. Now, this is relating to SEZ. Let us read it. X, an individual resident, set up a unit in special economic zone in 1516. Well, here again, you will have to be careful. It's the current year for production of mobile phones. Unit fulfills all the 10A things. Now, why, sir, why are you using this? You can use a Singhania text only. The reason, because I want you to get that feel of the paper. That's why I'm doing it, so that you are comfortable with reading the way the paper is. That's why I have taken the exam paper itself, the format in which it comes. I could have easily used here. Here it's also solution is the solution, the question is there in Singhania. But when you read it, it will not be clear. That's why I want you to read the way it is given in the exam paper, same way. So resident individual, so you can underline when you are reading it in the exam also, please try to underline so that you can remember these things. You can make like this, special economic zone, year, production for what, mobile phones, like that you can highlight so that you are registering what you're reading. And 10A section, like that you can make your mark in your question paper, no problem. But read it carefully. That is what is important. Next, what is he saying next after this? Now. So first part, we understood that. Now what they're saying, during the year he set up, so first was he was 10A registered, he was doing mobile phones. Now he's setting up a warehousing facility in the district of Tamil Nadu for storage of agriculture produce. It also fulfills all conditions 35D. Now, not only 10AA they are saying, that is one part of it. Another thing, now they are bringing in 35AD. Right. Now, capital expenditure in respect of warehouse, which he has done, amounted to 93 lakhs, including cost of land. The warehouse became operational with effect from 1st April 2019. Whenever that year in which the exam paper is set. An expenditure of 63 lakhs is capitalized in the books. Okay, sir, I have understood it. Now, what are they saying further? Some more things they are saying now. So, two things we have 10A and under 35AD, he set up a warehouse for which he has spent 93 lakhs. Out of that 90 lakh, 30 lakhs is for land. So 80 lakhs is other than land. Please remember this, because I can't retain this, whatever I'm writing. Otherwise, I'll have to go to board. So 80 lakhs is what is he has actually spent for other than land. But he has capitalized 63 lakhs. So it doesn't tally. Now that don't expenditure of 63 lakh was capitalized. So apart from that, expenditure he has capitalized. This is for already purchase of capital expenditure. This is expenditures incurred to be capitalized in the books. Now let us go further. What is saying? Profit from operations of warehousing facility. Only relating to warehousing facility, he is getting 1,10,000. Net profit from that SEZ is 50,000. Export sales of SEZ, 90 lakhs. Domestic sale of this thing, so much. So this needs to be separately taken. So what is saying? How much of the net profit is taxable? How much is not taxable under 10AA? Because to the extent of exports, it will be, so total, how much is the turnover? This plus this. 90 plus 60, 150 is the turnover relating to total sales. But out of the 90 is exports. Therefore, 50 lakhs, which is a profit, multiplied by 90, which is for export, by 150 total sales is your exempt amount. Compute the income, including AMT. Now, that is again a problem. See, AMT also they have now done. See how they are complicating it. Already 35AD, 10AA and all is coming. So compute including AMT. So even EMT you have to do normally as well as AMT. Now, apart from that, this 1,10,000 is profit from operation before claiming under 35, before claiming under 35AD. So you have to, this is the profit before that. So from this, you have to claim the deduction under 35AD. Now under 35AD, what is the deduction that is available? So two parts to it. One is your 10AA income. Another one is the warehousing. This is what they are expecting you to know. So let us look at the solution, how it is taken. What I'm trying to tell you is that please read the question properly in the exam. You'll be able to do it. If you know some of the provision, you will be able to do. Now let us look at how they have done before without AMT. Without AMT, what they are saying, they are taking the profit of SEZ. Now see, reduction available on a 10AA, as I told you, how much is that? 50 lakhs is the profit given, multiplied by export turnover divided by total turnover. Total turnover is how much? 1,50,000. Why? Because 90 lakhs is export plus domestic is 60 is equal to 150. So that's our total turnover. On that, how much is export? 90. Therefore, total exemption available is 50 lakhs multiplied by 90 by 150. So therefore, you will get an exemption of 30 lakhs out of the 50. 20 lakhs only is taxable for the SEZ. Why? Because that to the extent of 60 lakhs, they have sold outside other than export. That is why. So that is as far as the first one is concerned. Number one, which is it profit of SEZ. Now let us look at warehouse. Warehouse total income is this. But in that under 35AD, 100% of capital expenditure excluding land being cost of land can be taken. So to that extent, only 80 lakhs. I did the working, if you remember, only 80 lakhs will be available as deduction and 30 lakhs will be only taxable. Therefore, total is 50 lakhs here. This is the tax calculation. Now, if they leave it at that, it's very simple. Now, they are not going to allow you to, escape. Now, what they are saying, no. You also do AMT. I want to see how do you do in AMT? Now, what is an AMT? What they do is you take this income and remove these deductions that you did. So if you look at it, income computed above, that is this 50 lakhs. Remove the adjustment as if there is no deduction. No deduction. And then see what is the situation. So if you remove the deduction, what are you getting here? So when you do that, you are getting 50 lakhs is not the, this is the 50 lakhs they're talking about. Huh? Don't get mixed up. To that, what you have deducted, the 30 lakhs you deducted, 80 lakhs you deducted. Therefore, you're adding it back. So you're coming to the total profit, which is basically that 110 plus 50 original profit of SEZ and see, this 50 lakhs, ultimately what? This 50 lakhs plus this 1,10,000. That is what you will get there because you are disallowing the expenditures. As if you have not got that. But one thing is that because in 35AB AD, you got a deduction of the 80 lakhs for capital expenditure. But when you are not getting that exemption, you should get the depreciation benefit on the building. See, depreciation on 80 lakhs you should get because the other part 13 lakhs is relating to what is it? 13 lakhs. So here there is a typographical error. This should be actually 13 lakhs. Huh? So 13 lakhs is on the land. Therefore, on the building, you will get 8 lakhs deduction, depreciation, which you did not get here because you got the entire asset itself deduction. So therefore, now your income will be 1,52,000 under AMT and at 18% AMT, you calculate 28 lakhs. And what is the amount that you are getting? $33 lakhs. See? Now here, what did you get? In this 13 lakh 65, here you got 33 lakhs. So what they're saying, B is liable for AMT at 33 lakhs. Since it's regular in tax liabilities, 13 lakh, the excess tax. So he has to pay 33 lakhs now. Now what happens after that, sir? I am supposed to be only 13 lakhs. So they are saying that because of the benefit of those shares, you cannot, or those through benefits of those deductions, you cannot escape tax now. You pay it now. But later on, when you are going, that is, so excess paid is how much? 33.63 minus 13.65 is coming to this 19.98. That excess you are paid. You are supposed to pay only this normal calculation. But under AMT, you are paying 33. Therefore, you are paid this much extra. So that extra AMT credit will be available, can be carried forward under 115 JB, and later on it can be set off when you get normal income. That means later on when you get normal income, you can set it off. That note you have to give. This note also you are supposed to give. Now see, actually the problem is very simple, but if you don't know 35 AD, if you don't know 10A, how to calculate, they are not going into intricacy, the simple thing, but you have to understand the concept here. Okay, so let us move on. What is the next question? So this is how many marks they are asked? 6 marks. See, 6 marks. If you know, you can write. Otherwise, it will be difficult. You have to make a story only. Now, this is another question. 3A. What is the question? Rajesh was employed by, see, that's why I'm saying what I'm trying to do now is not to give you the solution is there in your this thing. If you just look at it, you will understand solution, but that's not enough. How do you handle problem that is going to come in the exam? That is what we are trying to, decipher in this way. Because when you read it properly, only you will get it. Of course, you should know the provision. I'm not saying that you cannot learn now. Whatever you have learned, you try to do. But at least try to understand the question properly so that you can write it. He was employed by Axis Limited, Mumbai. He received how much? 45,000 per month from, again, these dates are what is significant. Be careful. 45,000. He resigned and left for Dubai for the first time on 28/9. Now, the moment you look at date, whether he is a resident in this year or non-resident, you have to check. Now, what is it? 182 days. You have to see, check here, because he has left on 28. And if you look at it, I don't think he has stayed in India for 182, but you have to write and if required, calculate it and show it there. So that he's not in India, he's only in India for so many days, and therefore he is a non-resident. Then what happened? He went to Dubai and got a monthly salary of equivalent 90,000 from 110. So this is from 110, 29. Dates are very important to 31/3. However, his salary from October to December is credited in Mumbai account. Now we go to deemed to accrue or rise concept. Deemed to accrue or rise, we have, if it is received in India, it is not deemed to accrue, it is received in India. Therefore, this period from October to December will get taxed because he's received in India. And the other part salary is from January to March is credited in Dubai. So this is totally free, no problem. No problem for this. The problem is that even though he's a non-resident, from 28 he is getting 90,000 equivalent of salary, but from October to December, it has been credited to Mumbai account. That is trouble because he is received in India. If the foolish thing he did was, you should not have done that. If you wanted to bring it to India, you should have credited to a bank account there and then transfer it to India, no problem. It would have come under number 5 of our list. But what he did, he wrongly got the company to credit it to this account. Therefore, it was a problem and it became his income in the current year, apart from this income anyway. Okay, but here, maybe now again, mind you, for a person who is working in a ship, there was case law that has come where even if the company is giving, because he is moving from one place to the other, therefore, even if the amount is being credited to his Indian account, NRA account, it is okay. This is a CBDT clarification has come. Now that, if they ask, you have to be careful. In that case, is October, December will also not be taxable. And you have to write that CBDT, something you have to write. You check in Singhania if there is anything mentioned there or in your text relating to that. Or you can tax it like this, the way it is done here. And then you can write a note that in the case of a person who is traveling in a ship, CBDT has clarified that this need not be taken. However, I have not considered the same. Like that, you can write. That is recent because the case went up to, each High Court took a different decision and Supreme Court finally affirmed the logic, which is not in line with the normal understanding, but the way they have done, because this person is moving from one place to another. He cannot have an account in one place. Therefore, he said, okay, you credit it to my account directly. Because he's one day, now today, this month, he is in, say, Lisbon. And the next day, he is in Ankara or somewhere. So that becomes a problem for him. Therefore, he wanted it to be credited to his account. Next, what is the thing that we need to read is, so this first part we have understood. Now, the cost of his ticket to Dubai, 1,50,000 was funded by his sister in London when traveling. Now, what is the implication? It is in kind, it is gift, literally. His money, cost of air is funded. Whether it is money is received or not, even then it is from his sister. Therefore, it is exempt under normal other sources. Similarly, the cost of his initial stay in Dubai was 40,000 was funded by his friend in Delhi. Now, this friend is not a relative. Therefore, there can be a taxability in this, but you have to write that is below 50K. Therefore, it is not be taxable. Anything else? Let us see. Then we'll look at the solution. More is there. So many subparts are there. That's why each one you have to carefully read. It further received interest of 10,500 on his fixed deposits and 7,500 on his savings account with Mumbai Bank. Fixed deposit, 10,500 fixed deposit. Again, that is taxable. And 7,500 savings account in Mumbai with Mumbai. Both are with Mumbai. It is taxable. It's received in India. It is taxable. He also paid LIC. But again, exemption will be 80 TTA will be available. Up to 10,000, it will be available. He paid LIC 15,000 for self, 10,000 for spouse, and 25,000 for mother aged 71 years. Now, LIC is not available for parents. It is only available for both of them and their children. Not available. So when you look at it, you will generally do, because this is for 80D. It will be available, but not for 80C, mind you. Not for this. Only for this it is available, not for this. So that is what now compute the. So basically, if you look at this itself is a small problem in itself, the way they are asking. So let us look at the solution and see what is done. Now see. Salary A 45,000 for 5 months and 20 days. Now see, 20 days I have calculated 2,55,000 because it is left in between the year, in between the month. That's why. Foreign employment received in India, that from October to December, that is also taxed. Again, foreign employment, not taxable. X is a non-resident because that he has received there itself. It is not taxed. Standard deduction is getting income from other source, income from salary so much. FD interest 10,500. Savings interest so much. Gift from sister 1,50,000. Not taxable. It's from a sister. That's why it's not taxable. Gift from a friend, boarding expenditure funded by this thing, not taxable. Why? It is taxable, but it is, if it crosses 50,000, it will be taxable. Now it is not crossed, therefore it will not be taxable. So that is the total income. Then LIC, 80C, 15,000 for himself, for wife, for total this thing, because mother is not available. Now see how intricate they are asking. If you know these sections properly and you can remember, 80A, TTA bank interest 7,500 is available. 80 TDB for X is not a senior citizen. This is not relevant. I don't know why they have given that. So X TTB is not available because he's not a senior citizen. That's how your total income. Now, mind you, here, be careful. They have asked only total income. They have not asked you to do the total this thing. So don't do tax calculation here. In the question, they have asked only for you total income, mind you. This all you have to take care, because unnecessarily if you calculate, there's no use for you. There's no time. Don't lose the time in doing these things. Now let's look at the next question. Hari, 57 years, is a resident. He provides the following information. Again, He seeks advice for liability to file the return, 4 marks. And something else they have asked. What will be the answer if he has incurred 4 lakhs on travel expense on his newly married son and daughter in-laws honeymoon in Canada? Now let's see. Hari, 57 years, resident in India, right? Interest in non-external account maintained. Now say resident and sir non-external, how is possible? Yes, it is possible up to a certain period if it is allowed as per the RBI law, because he was a non-resident. Now how they are confusing you, see. He is a non-resident and he has a right to maintain that NRE account for a certain period of time as per RBI stipulation. Then it is exempt because an NRE account. But if he's continuing to keep it beyond a certain time, not permitted by RBI, for I don't remember the exact name, that is as per the FEMA thing. So many years after that, he can keep it up to that. But if he's keeping it beyond that, then it will not be allowed. It will be taxable. So they don't tell the bank to change it to a normal SB account. They'll keep it there and they think it's not taxable. It is not taxable for a certain period of time after coming back. But after that, it is taxable. Then interest on savings account maintained in SB, it is taxable. There's no doubt about it. NRE only not. Fixed deposit only, yes, it is taxable. Now the question is whether he should file his return or not. Because his income is only this, taxable income is only this, is exempt. Under 10(4) section, it is exempt. Therefore, that is not taxable. Now it is below limit. Therefore, he need not file the return. But what is it? For foreign travel, if he is doing, let us see what they are saying the solution. Now, what are they saying here? Why a resident is total income without giving any deduction under 80C to 80U, 10A, without giving any exemption under, this is the rule that whether to file the return or not. Under 139, all these deductions, before giving these deductions, all these, see what deductions they're talking about, please take care. Does not exceeding 2,50,000, therefore he is not required to file his return. Now see how they then see 10(4), 8,000, this is nil. Why? It is assumed that RBI has permitted Y to maintain an external account. So it is below that limit of 2,50,000. Therefore, there is no requirement for him to file. If, however, Y has incurred foreign expenditure, 50,000 or more, he would be required to file the income tax return, regardless of the quantum of this thing is less than 2,50,000. He has incurred foreign expenditure. Now, foreign travel expenditure. Now, the question is, there is a little doubt here whether you got 10 minutes more. Huh? So again, that problem will come. Now, the question is, he has spent it for his married travel expense of his married daughter, married son and daughter-in-law. Now, whether that will come under this category or not, I will check and tell you, because I presume that it will come. Travel expense he has spent. Now, for whom doesn't matter. Whether he has to travel himself or not, it is not a question. It is he has spent travel expense for somebody's travel. So it will get attracted and you will have to file the return. I will check that aspect and tell you, because I need to check the section, whether they are clarifying that it is for his travel or anybody's travel. Okay. So let's move on. So just see how depth they are asking. Please be aware of it. Now, income deemed to accrue, this is a non-resident. Income deemed to accrue or rise in India to a non-resident by way of interest, royalty or fees or technical fees. If you remember this, we have already discussed the table. I think it is chart number, one second. Under residential status, the first chapter, we have discussed that. Chart number 1. So chart number 1, income deemed to accrue is to a non-resident. So interest received from a you have to just discuss that chart basically. Now the person who is receiving it, receipt is a non-resident. Under these cases, you have to discuss that. So that table is what you need to discuss. Now, mind you, income deemed to accrue to a non-resident, mind you. Now the table is saying that interest royalty received from government, resident and non-resident. We are not talking about this. We are talking about this. He is asking about this. So if this guy is a non-resident, how does it matter? So that depending on these situations only you have to answer. That is what they are asking. To a non-resident. Here is what we are asking. Okay. So please check the answer in the text because I'm not going into that. That's a theory question. You'll have to look at it. But be careful about the answer. Don't take it for granted. Now 4A, what is this question relating to? During the previous year, following transaction took place of Magar, who is 56 years old. Raghav owns 2 house properties. The details are in respect of so much. Self-occupied and let out. Rent not applicable, self-occupied. Here is 60,000. Principal taxes 7,000. So much. Interest on loan 3,50,000, 5 lakh. Principal payment, repayment 3 lakhs. Now, what else they are saying? Now what they're saying is that Mr. Raghav has a house in Delhi. During the financial year, whatever, he had transferred the house to Vamika, daughter of his sister, without consideration. When 2000, house would go back to Raghav after the life of Vamika. The transfer is made with the condition of, so this is a conditional transfer, revocable transfer. Then now in this year, he has got from that Vamika has received 5,50,000. Now who's the conditional owner? Vamika. She has received 5,50,000. The question is whether it will get clubbed in his name or not. Yes, it will get clubbed because it's a revocable transfer. So all these conditions are the 10% no concern shall be made to Mrs. Raghav, and more importantly, without consideration, and it is revocable transfer. That is why this 5 lakhs will get taxed back as clubbing in the hands of Mr. Raghav. That is what they are asking. But please write a note. Just don't say that 5,50,000 income of this thing and then why? Because it's a revocable transfer. You know the section, you can write that. The next one is Mr. Raghav receives following income from M Limited, interest on debenture 7,50,000, 3,75,000 salary of 3 lakh. He does not possess adequate professional qualification to commensurate with the salary. Now, M Limited should be bothered about it. They have paid the amount. 3,75,000 he has received, doesn't matter to him. He has received it. Now, the problem will be with M Limited. I'm saying this is the way you should analyze the question. If you read it, now itself practice. Now, apart from that, shareholding pattern they have given for the company M Limited, this M company. Because in this M company, if you look at it, Miss Jayakrishnan brother is a problem. He is having this thing. But what is the implication? We'll see. It's not over. See, Mr. and Mr. Raghav form a partnership. Equal share. He transferred fixed deposit 1 crore. Assume that this is capital. Firm has no income and expense other than interest of 9 lakh. Now 9 lakh with his interest, it will be divided in 2 parts. Interest on the 50% of the, that is the income that is getting distributed to him. So that interest on deposit will be taxed. Firm distribute the entire surplus to Raghav. So that interest is becoming his share of profit. The share of profit will be taxed in the hands of the firm, not his hands. And this amount as share of profit he is getting will not be taxed. Let's see what it's saying then. So I'm saying what are the implications? The doubt comes what will happen here. That is, in this case, partnership is formed with equal share in profits. fixed deposit of 1 crore. So that income, deposit income is coming and it is being distributed. The entire surplus is being distributed. So the implication whether it will go back to him or not, that is the question. That 4 lakh 50 or 9 lakh, whatever, we'll see that. Mr. Raghav holds preference shares in K Limited. He instructed to pay dividend to Gitanshi, daughter of his servant. The transfer is irrevocable for life, and Gitanshi, dividend received by Gitanshi is 13 lakhs. Now, without transfer of the shares, he is only transferring the income, not allowed. Okay. So that's why I'm saying sections are what is important. Provision, if you know correctly, only you will be able to do it. Mr. Raghav holds, that's we don't. Okay. Other than that, what is there? He has got interest on savings bank account 2 lakhs. That again will be taxable. Cash gift 75,000 received from daughter of his sister on birthday. Now, again, the problem is whether it is relative within the daughter of sister, whether it is coming under the meaning of definition of relative is a question. You have to be knowing. Unless you know that definition, you remember I did a chart for this relative. So that chart is what should be understood. This daughter of his sister not coming under relative, therefore this will be taxable in his hands. So let us look at the solution. So house property, 1, it is self-occupied. Municipal taxes, again, this is a question, sorry. So whatever we are discussing in Singhania, so don't worry about it. You can easily go through it. Now, if you look at the solution, what they are saying is the first one is gross. This is house number, first one. So salary from M Limited, Mrs. X has substantial interest and her shareholding along with shareholders. So here, that salary that is getting, the reason that M Limited is having a problem, but the issue is it will get because Mrs. X is having substantial interest in M Limited, more than 20%. Therefore, the income will get clubbed in the hands of Mrs. X and not in his hands. It will not be taxed in his hands. It will be taxed in the hands of Mrs. X because Mrs. X is holding substantial